Welcome back to Your Real Estate Voice with Barb Schlinker, the weekly radio show that informs and educates you on how to buy or sell real estate with Barb Schlinker, the owner broker of Your Home Sold Guaranteed Realty. Now, Barb, with interest rates going much higher than the past 10 years, buyers are looking to get into homes with lower payments. So, why are VA assumable loans attractive to buyers, and what are the pros and cons for home buyers?
Well, Richard, we haven't seen people interested in assuming VA loans for a long time because the rates were low up until the middle of 2022. And actually, any VA loan is assumable, which a lot of people don't know. And the other piece that a lot of people don't know is that you don't have to be a veteran to assume a VA loan, which can be huge right now with the going interest rates for a new VA loan hovering around 6.5, maybe a little bit higher. There are some people still that have VA loans with crazy low rates, 2.25, 2.75. And if they're willing for them to be assumed and you're the buyer for that house, all you have to do is make up the difference in cash. So not only are VA loans assumable, but the loan closing costs are pretty much negligible. There's no appraisal. They might charge like $300 to do a in-house online review of its value. There's a little processing fee of a couple $100 compared to 2% of the loan amount for typical closing costs for getting a new loan. It's really nothing. You just pretty much pay a small fee and you take over payments with that existing loan with a really low interest rate. So the buyers that have figured it out, when they see a VA assumable loan available, they are so excited. They will knock down any door to go, hey, don't cancel your open house. I want to buy this home. That's what we had one say to us. So there is some requirement for the buyer. Basically, in order for the buyer to assume the loan, they have to pay the difference in cash compared to what what the buyer's sales price, what the sales price is versus what the loan balance is. And typically that would cover things like commission, taxes, title, settling up any anything that needs to be settled up at closing, title insurance and stuff like that. But it's still a tremendous deal. I have successfully closed, I think, four of them in the last year. And it's a great thing for the buyer. I mean, just to tell you the most recent story that I closed is a house in Banning Lewis Ranch. The seller asked a price of $674. His loan amount was about it was about $575. So the buyer made an offer full price to assume his loan, and they had to come up with the difference in cash. And when it was all said and done, they took over payments that had already been under process for 2 years. So they really cut the loan term down by 2 years by taking over payments. But the interest rate on that loan was 2.75% versus current rates, especially conventional, probably closer to 7%. So the dollar amount that they would save over the life of the loan is at least $500,000. And anybody could qualify to assume a VA loan. The buyer does not have to be a veteran. However, the buyer does have to intend to occupy the home. So it's a really huge savings for the buyer. And so how does a buyer find these? They're not easy to find. It's kind of interesting. Our local MLS kind of discourages putting anything financial in the publicly facing remarks. So you really have to get with a good real estate agent that knows how to search for it, because it's hard to find. It's not necessarily obvious up on Zillow and some of the tech company websites where the buyers are. But if you do, we have a way to get around that. We have an alternative MLS that we use that that allows us to use marketing phrases to attract those buyers. And that's why I've been able to sell all of my VA assumptions very, very quickly. Now, a lot of people wonder, okay, so what's the risk to the veteran if you're a veteran and you're sitting on a 2.5%, 3% mortgage, you're going to sell your house anyway. If you sold your house and you did not let it be assumed, that loan dies with you, and you would have to go get another VA loan at the higher rates now if you choose to use your VA again. So the good part of this, allowing a buyer to assume your loan, a couple of good parts. One is the buyer is more than willing to pay full price with no concessions. There's no need for concessions. There's no need to buy down the interest rate. There's no need to pay huge closing costs, because there are no closing costs when you do this. And when the assumption takes place, the credit reporting actually stops for that seller. So they're no longer going to report to credit. When the new buyer assumes the loan, they're going to report to their credit, not the seller. And it does affect their, what they call the VA eligibility. So VA eligibility becomes a very interesting math equation, but essentially, if a veteran served, they have a certain amount of eligibility to buy loans. However, I had one that sold their house up in Crystal Park, and their loan balance was fairly high, above 600,000. And they went on to buy another house in another state where they paid 1.2 million. So they were putting a down payment when they did that purchase, but they were able to capture something called bonus eligibility. And I don't know how lenders do that. But essentially, because the rates are lower on VA in general versus conventional, they were able to use their VA again and buy that home up in Wisconsin without having to opt for conventional. So it doesn't lock you out of using your VA. You can use it again, just like veterans. If they were stationed, say, in North Carolina, they left their home to be rented in North Carolina, they moved to Colorado Springs, they can still buy another house using their VA. So it is a possibility, and it's a good possibility for a lot of people. Now, the only scary downside is, what if the borrower that assumed that loan that's now in their name, okay, and the credit reporting is now in their name, what if they foreclose? It will not affect the veteran's credit, but it will affect their eligibility. In other words, it could take some eligibility away. And I saw this on the short sale days where people had to short sale a house, and that affected their eligibility when they bought another home. So really all that means is the veteran, if they use their VA loan again, they might have to put down a down payment. But absolutely, it does not hurt their credit score. And it absolutely is a massive financial gift for a buyer right now, especially in the current environment where interest rates are hovering, 6.75, 8%, where they could walk in the door with these beautiful low payments and be able to take over a mortgage from a veteran. My name is Barb Schlinker. I am also a veteran, a retired Navy commander. My last job, I was an intel officer up in NORAD, which was really fun. And now I own Your Home Sold Guaranteed Realty, and I'm the host of this show, Your Real Estate Voice. And we're talking about why VA loans that are assumed are very, very attractive to a buyer. And then next up, we're going to talk about some of the pros and cons of trying to assume a VA loan. So if you are thinking of making a move and you want to talk about all these options with me, just give us a call, 719-301-3900, or go to barbhasthebuyers.com. Richard?
Barb, we're talking about those pros and cons of assuming a VA loan. So, what are some of those pros and cons versus getting brand new financing?
Well, it's all benefits to the buyers. Basically, the pros for buyers are they walk into very low payments. They have a massive savings on interest. I'm talking, if you actually do the math, it's anywhere from $250,000 to $500,000 over the life of that loan. And it allows buyers to be able to afford a better, larger, what would be a more expensive home for them. And the issues are that it does require a down payment for a buyer. Typically, the buyer has to pay the difference between the loan amount and the sales price And it does vary. Of the ones I've closed, I had one buyer that brought a couple $100,000 to closing, but they were delighted to walk into a 3.5% interest rate fixed. It does take longer to close these deals as well. I had one take 6 months, and the only reason it took that long to get it approved by the lender is that the lender didn't tell us that they had sold the loan. They kind of sat on it until everybody was informed. And so they just ignored our process. And then they said, oh, sorry, we sold the loan. Go do it with someone else. And then it was the normal time frame. I've seen it happen as little as 45 days or as long as mostly 90 days is probably the average of what I'm getting right now. The benefit to the seller is it makes your home sell fast. It makes your home sell for top dollar. You don't have to worry about concessions. You're going to get this done, but it's just going to take a little bit more time. Really, the time involved is the approval process. And you can't take that loan with you, so why not consider it? The only issues for seller is if that borrower forecloses on that loan, it might affect your eligibility should you plan to buy another house using your VA down the road. That could mean you might have to have more down payment or something like that, but it won't hurt your credit at all. So that's good to know. And so I just want to let you know, if you are thinking of making a move, we'd love to talk with you. I am a veteran. Most of the people at my company are veterans or related to veterans. Not all real estate agents are the same. And if you are thinking of making a move, give us a chance. We'd like to talk with you. Call us at 719-301-3900 or go to barbhasthebuyers.com. Richard?
You're listening to Your Real Estate Voice with Barb Schlinker of Your Home Sold, Guaranteed Realty. And if you are thinking of making a move, call Barb at 719-301-3900 or visit barbhasthebuyers.com. We'll take a short break. When we come back, we'll be discussing how to sell a house fast and for cash, plus Barb's hot new listings. Stay tuned for that.